1. Business model and core value core purpose. The why. XRP's fundamental purpose is to enable fast, low-cost, and scalable cross-border payments and remittances for financial institutions, payment providers, and individuals. Its unique value proposition, UVP, is the ability to settle international transactions in seconds with minimal fees, addressing the inefficiencies, high costs, and slow settlement times of traditional correspondent banking systems like SWIFT. Category and competitors. Category: Layer 1 blockchain, XRP Ledger, focused on payments and settlement infrastructure. Top 2 direct competitors, Stellar, XLM. Also targets cross-border payments and remittances with a similar consensus mechanism. Algorand, Algo, competes in the high-speed, low-fee payments and settlement space. Revenue model, transaction fees. Each transaction on the XRP ledger incurs a small fee, a fraction of an XRP, which is burned, destroyed, reducing total supply over time. This is not a revenue stream for validators or the protocol, but acts as an anti-spam mechanism. No staking or inflation. XRP does not offer staking rewards or inflationary issuance. Sustainability. The model is sustainable for network operation, but does not generate protocol-level revenue for token holders or validators. Ripple Labs, the company behind much of XRP's development, generates revenue through enterprise software sales and by selling XRP from its reserves. 2. Team, partners, and technology founders, and team, key founders. Chris Larson, serial fintech entrepreneur, previously co-founded eLoan and Prosper. Jed McCaleb, early crypto pioneer, also co-founded Stellar, XLM, after leaving Ripple. David Schwartz, current CTO, respected cryptographer, and one of the original architects of the XRP Ledger. Team status, fully doxed, with a large, experienced team at Ripple Labs. The company is headquartered in San Francisco, USA. Major backers and centralization. Major partners, SBI Holdings, Japan. Strategic partner and investor, driving XRP adoption in Asia. Santander, early pilot partner for RippleNet. Standard Chartered, has explored Ripple's technology for cross-border payments. Centralization risk. Ripple Labs holds a significant portion of XRP supply in escrow, which has led to ongoing concerns about centralization and potential market influence. Technical architecture. Consensus mechanism. Unique Federated Byzantine Agreement, FBA protocol, called the Ripple Protocol Consensus Algorithm, RPCA. Validators are chosen by a unique node list, UNL, not by mining or staking. Scaling solutions. The XRP ledger is highly scalable natively, 1/500 plus TPS, with low latency and fees. No sharding or roll-ups are currently implemented, as the base layer is already high throughput. 3. Tokenomics and financial health current metrics, as of September 2025. Current price, $1.52. Market cap, $28 billion 24-hour trading volume, 1.1 billion supply dynamics. Total supply, 100,000 XRP, fixed at Genesis, no new issuance. Circulating supply, 54,000 XRP, varies as Ripple Labs releases tokens from escrow. Inflation, deflation, deflationary in the long term, as transaction fees are burned. However, the release of escrowed XRP by Ripple Labs can increase circulating supply, creating downward price pressure. Vesting risk. Escrow releases. Ripple Labs holds 46 billion XRP in escrow, releasing up to 1 billion XRP per month. While not all released tokens are sold, this mechanism creates ongoing vesting risk and potential for short-term selling pressure, especially during periods of low demand. 4. Risks, future plans, and verdict. Top 3 risks. Regulatory. Ongoing and high-profile litigation with the U.S. SEC over whether XRP is a security. The outcome could have major implications for XRP's listing on U.S. exchanges and institutional adoption. Technical. Centralization of validator nodes and the large XRP holdings by Ripple Labs could pose risks to network neutrality and resilience. While the protocol itself is robust, any critical bug or exploit in the consensus mechanism could disrupt the network. Competitive. The cross-border payment space is crowded, with competitors like Stellar, Algorand, and even stablecoin blockchain-based solutions, e.g. USDC on fast L1s, vying for market share. If banks and payment providers opt for alternative rails, XRP adoption could stagnate. Future roadmap. CBDC integrations. Ripple is actively working on enabling central bank digital currency, CBDC, issuance and interoperability on the XRP Ledger. Smart contract support. Ongoing development of hooks and sidechains to enable more advanced programmability and DeFi use cases. Institutional partnerships. Continued expansion of RippleNet and on-demand liquidity, ODL corridors, especially in Asia-Pacific and Latin America. Final verdict. XRP remains one of the most established and liquid crypto assets, with a clear use case in cross-border payments and a strong enterprise development team. However, its long-term viability is clouded by significant regulatory uncertainty, centralization concerns due to Ripple Labs' large holdings, and increasing competition from both crypto-native and traditional payment networks. The single most critical factor for XRP's future success is the resolution of its regulatory status. Without legal clarity, institutional adoption and ecosystem growth will remain constrained.